Picture this. Gold isn't getting more valuable. Our money is just worth less. Yes, every day the dollar's value shrinks, and the impact isn't just in the US, it's global. Now, the financial world is watching as gold hits historic highs, topping approx. 20,700 per troy ounce, not because gold is suddenly a precious powerhouse, but because the dollar and other major currencies are steadily losing their footing. And as if that weren't enough, the BRICS nations, led by Russia, are discussing alternatives to the dollar as their go-to reserve currency. All of this signals one thing: the American dollar is under threat, and it's the actions of the government that are pushing it closer to the edge. For starters, gold has been on a nearly unstoppable upward climb over recent months, inching closer to the real historical highs it hit back in January 1980. When we say real highs, we're talking about inflation-adjusted prices. Inflation-adjusted means we're accounting for the fact that the dollar has lost value over time, so we calculate what gold's price would look like if we adjusted it to the value of the dollar in 1980. For example, if we look at oranges according to Federal Reserve data, in 1980, 1 pound cost 37 cents. Today, that price is more than 4 times higher. And as you can see, the same thing is happening with gold. When we compare today's price with 1980's inflation-adjusted price, we see that it's nearly the same, around 4 times higher than it was in 1980. So gold isn't just increasing in dollar terms, it's hitting a peak that matches its real historical value from decades ago. Usually when interest rates go up, the price of gold goes down. This is because high interest rates make bonds more attractive. A bond is a type of investment where you lend money to an organization, like the government, and in return, receive a fixed return over time. When rates go up, bonds give higher returns, so people usually shift their money from gold to bonds. This shift typically drives gold prices down, but right now, that's not happening. Even though US 10-year bonds are offering a high return of around 4.2%, gold prices are still going up. This is unusual and points to a bigger issue. Countries around the world are worried about the value of the dollar and the trust in the SWIFT system. The SWIFT system, or the Society for Worldwide Interbank Financial Telecommunication, is essentially a global messaging network for banks. Think of it as a highly secure email system, specifically designed for financial institutions to communicate. When banks in different countries want to transfer money or conduct other transactions, they use SWIFT to send standardized messages that contain instructions for moving funds. SWIFT itself doesn't actually move money. Instead, it sends messages between banks, letting them know things like account details, amounts, and transfer instructions. This system is crucial for international trade because it allows banks around the world to speak the same financial language and process transactions accurately and efficiently. The US has significant influence over SWIFT and has, in recent years, restricted certain countries from using the system as a way to enforce sanctions. This limits those countries' ability to participate in global trade and finance if they don't align with US interests. As a result, other nations are increasingly concerned that relying on the dollar and SWIFT could be risky. So instead of putting all their trust in dollars, they're buying gold as a safe backup. Central banks worldwide are increasing their gold reserves, which are the gold holdings they keep as a financial safety net. This high demand for gold is pushing its price higher, even though interest rates are rising. Why this sudden scramble for alternatives? The conflict in Ukraine and resulting financial sanctions, including frozen reserves and weaponized economic policies, have highlighted the dollar's vulnerabilities. Countries are trying to protect themselves from being exposed to US-driven actions by diversifying their reserves, increasing their gold holdings, and even turning to Bitcoin as an alternative. By diversifying their reserve currencies, these countries, especially Russia and China, are looking for financial stability outside of dollar dependency. This growing shift shows that confidence in the US dollar is declining, which could lead to a major shift in global finance. The US should take note, as it's not only the BRICS nations, other countries are also closely watching this situation. Because remember, the price of everything depends on one question: do you want to buy or do I want to sell? This means that if I have something I need to sell, but you're not that interested, I'll likely lower the price to encourage you to buy. On the flip side, if I own something I hadn't even planned to sell, but you're really eager to buy it, I can increase the price. knowing you're likely to pay it just to get what you want. In the bigger picture, between nations, this same principle applies. If countries gradually lose confidence in the dollar's value, demand will shift elsewhere, driving down the dollar's worth, while alternatives like gold and Bitcoin rise. It's no coincidence that Bitcoin, like gold, is seeing a price surge as a hard asset, a fixed supply asset that can't be inflated or manipulated as easily as fiat money. If this trend continues, we may reach a tipping point where the dollar's influence diminishes significantly, reshaping the global economy. As mentioned, there's the BRICS alliance, Brazil, Russia, India, China, and South Africa, which recently hinted at the possibility of creating a shared currency to use as an alternative to the dollar. While some speculate that this could mean a full-blown BRICS currency, it's more likely that the goal is to establish a payment system that operates outside of Western control. This kind of system would allow BRICS countries to conduct trade and settle payments directly with each other, bypassing the dollar and the traditional SWIFT network. Creating an independent payment system would give these countries more financial sovereignty by reducing their exposure to Western political and economic influence. For example, if the US were to impose sanctions or restrict access to SWIFT for any of these countries, they'd still have a functional system to conduct trade. This shift could not only shield them from US sanctions, but also set the stage for a more decentralized global financial structure where power is spread across multiple countries instead of being concentrated in the West. So yes, in the eyes of many, the dollar is weakening because it is losing trust, but let's reflect on what this means, not only for the dollar, but other major fiat currencies. Practically speaking, gold has reached all-time highs against nearly every currency worldwide. Whether it's priced in euros, pounds, yen, or Chinese yuan, gold is hitting records everywhere, underscoring a broader shift in the global monetary landscape. This reveals much about our paper money era, where currencies lack a fixed anchor, allowing for limitless printing and, in turn, currency devaluation. Historically, after the US abandoned the Bretton Woods gold standard in 1971, many economists, including Milton Friedman and Ray Dalio, predicted that gold would lose its value as a monetary asset and become just another commodity. They believed that once the dollar wasn't tied to gold, the demand for gold would drop since it would no longer be necessary to back the dollar. They assumed that the dollar, now standing on its own as the global reserve currency, would retain its strength through international trust and demand. However, the opposite happened. Without a gold anchor, central banks worldwide gained the freedom to print money without restriction, leading to inflation and devaluation, which actually increased gold's appeal as a stable store of value, a safe haven asset, especially in times of inflation and economic instability. This brings us to an unsettling truth. The dollar-based monetary order is looking less sustainable every day. The limitless printing of money, combined with geopolitically driven financial sanctions, has only served to undermine the dollar's dominance. It is ironic, but as you can see, it's the US that's eroding the dollar's power through its own policies. Now, people and investors globally are seeking refuge because they recognize that the value of paper currency is slipping. In a world where the US continues to weaponize the dollar, it's no wonder that other nations and even individual investors are moving away from it. The question then isn't how high will gold go, but rather how low will our currencies sink? This dollar-led monetary system is heading into unexplored territory, and unless drastic changes are made, the dollar might not hold its power much longer. But what does this mean for the average person? It means rethinking where we place our wealth. People and governments are looking for stability, and they're finding it in assets that governments can't print more of. If you're interested in staying ahead of these shifts, make sure to subscribe. The financial landscape is changing fast, and we'll be here to keep you informed every step of the way. That's it for today, so stay curious and stay hodling.